Fundamental analysis. As a new trader, there is no way of getting around fundamental analysis. You don't need to be a financial guru, or you don't need to go get a degree in fundamentals. You don't. But you must understand the basic impact that fundamentals analysis have on your market that you're trading. And fundamentals affects whether you're trading um, currencies, forex, futures, options, stocks, precious metals, options, whatever market you're trading. Fundamental plays a key role. There is one, two, three, four, five, six key fundamental aspect we're going to talk about: interest rate, GDP, CPI, unemployment rate, PPI, and retail sales. So let's touch on output indicators. So output indicators. So GDP, industrial production, retail sales. Any increase in the published data tells us that the economy is growing. If the release are strong, look for the appreciation of the currency. And let's go to sentimental indicators. Just an overview here. Business and consumer. This group of indicators serve as the barometer of the mood of consumer or investors. The more they spend, the stronger the national economy and the currency gets. Labor market indicators. Unemployment rate, payrolls, unemployment claims. The higher the employment, the better for the national currency. The opposite with unemployment. Kind of crazy, right? Housing market indicator. Building permits. Building permits approval. Housing starts. New and existing pending home sales. If there is a sign of increase in activity in the housing market, it means that the national economy health is good. This caused the exchange rate of the national currency to rise. Okay? Makes sense, right? Hope I don't lose you. I'm not trying to lose anyone. I'm trying to make this very simple, because this is important but not important. You have to learn it, you have to know it, but you don't need to know in-depth knowledge. Okay? Inflation. So inflation, nasty word, dirty word, clean word, whatever you want to call it. So inflation, CPI, PPI, WPI, RPI. Whenever you see these eyes, these reports are talking about inflation. Higher inflation is negative for the national currency. So higher inflation gonna push the US dollar down, while lowering inflation is positive. In the short term, however, CPI and other inflation index may have an opposite effect on the currency. Significant increase in inflation gauges may push the central bank to raise interest rate. This may cause the exchange rate of the currency to rise. Trade balance. The total value of the nation's export minus the total value of the nation's import. Greater than zero means surplus. Less than zero means deficit. When a country has a trade surplus, demands for its currency from foreign buyers increase. So the nation's currency appreciates. In contrast, a trade deficit causes the depreciation of the nation's currency. So another big one here is interest rate. So who controls the interest rate? Yeah, the banks. All major central banks. We're not talking about the local Wells Fargo or Chase. We're talking about the central banks. All major central banks set their key refinancing rate. There are two types of monetary policy. First one is called easing. Easing means they're lowering the interest rate if the national economy needs to boost. This impact on the currency is negative. The second type is called tightening. Tightening raises the interest rate in order to slow down the rising of inflation. The impact on the currency is positive. You may have to watch this more than once, guys. I had to read this over and over and over and over for it to make sense. It's not going to make sense for you the first time. I totally understand. This is why I'm here. This information, I had to gather it over over 7 years of trading and put it together and make it digestible, because people that know about these things, it's like so confusing. They make it so complicated. So I'm trying to make it not complicated. Okay. Now, while this is unpredictable, but you must pay attention to it. You should also pay attention to what's called geopolitical news. What is geopolitical news? Pandemics, wars, natural gas incidents, political unrest, which is like a war, upcoming election. All these things affect the currency of that country. All these things affect the US dollar. It doesn't matter what country or currency you're trading. If there's a war or a pandemic break out in that country, it's going to affect the US dollar. Why? Because the US trades with those countries, and it relies on these countries. They will affect. So you gotta be aware of what's going on with the news. You can use Twitter. Those are the things that you want to keep track of. Okay. There's nothing more to it. There's no more detail to go. And it's pretty. This is self-explanatory. It's pretty basic. If you're in a trade, okay, let's how you use this. If you are buying USD, right? You're buying USD. It could be JPY, USB card, whatever. And there's a political unrest in Saudi Arabia. It will affect the dollar. So you want to exit your trade, or if your technical is telling you to make a trade, you want to get out the trade. Make sense? If you're in a trade and there is one of these political unrest, natural gas disaster like the pipeline, election coming up, and it's going to call decision, whatever the case may be, and you're in a trade, you want to get out, you exit that trade before the news release. If your technical analysis is telling you to buy or sell, right, and the market comes down to your entry, and you want to sell, and the news is coming out, that trade is no longer valid. You do not take that trade anymore. That trade is no longer valid. Fundamental analysis void null your technical analysis. Let me repeat. Your fundamental analysis will null and void your technical analysis, because fundamental analysis override your technicals. We don't know where the market is going to go. We're not insider traders. We are technical traders. Our edge is on the technicals. We don't have any technical. We don't have any edge on fundamentals. We are not insider traders. Unfortunately, we're not billions. We don't have access to that information. Okay, we don't act. We don't have access to inside information. We are technical traders. We can only see what's going on, see what our technical analysis is telling us. So you just don't trade, guys. Just don't trade when there's news. You're gambling. And if anyone tell you that they could make money trading fundamentals all the time, it's not consistent. And the idea here is to become a consistent trader, not to make money Monday, Tuesday, Wednesday, Thursday, and give it all back on Friday. This is not my objective. This is not the way how I trade. I'm just trying to bring you guys into how I trade and how I'm able to become consistent. And the things I used before I became consistent, because I can identify exactly when I start becoming consistent and the things I stop doing. And the day that I stop trading the news, the day that I stop predicting the news, the day that I stop trying to flip accounts, that is the day when I become consistent.